Hello, everyone, and welcome back to another episode of the Velocity Channel. Listen, today we're going to be talking about a very sensitive subject, and that subject is what if I don't want to utilize my money? What if I don't want to utilize my money? What if I need to use other people's money? What if I want to leverage other people's money? And what if, CJ, my credit, I smashed it. I'm still recovering. I'm in credit recovery, right? And I don't know how I'm going to get out of it. What can I do in the meantime? Listen, folks, there's so much that you can do in the meantime. But first and foremost, this is what I want you to do. I want you to get on my list. Okay, we're going to have different lists set apart for you. All right, one of them is going to be the credit restoration list. Absolutely. What that's going to be, it's going to be a proprietary ensuring of you getting your credit restored in way less time. It's proprietary. It's not the regular credit repair at all. It's a very proprietary method, and testimony upon testimony upon testimony of people getting their scores raised over 100 points. And I'm talking about 90 days. All right, things that you wouldn't think that you could even raise it. All right, you're going to be on that list. All right, we're going to have the links for you under these lists right here in this description link. Now, don't go any further, because we're also going to show you what you can do with these cards once you get them. Number two, say, CJ, now what? I ruined my credit, right? You said credit restoration, but what if I want a credit card right now? What if I want to implement other people's money right now? Where can I go? Well, you're going to be going on the credit card list. Does that make sense? Absolutely. Now, I know a lot of you are hanging your head down as well, because you don't understand anything about business, but you want to get into business. Can I tell you that the number one reason businesses fail is because they fail to raise capital? We're going to show you how to do that. All right. So number three, you get on my list. If you want to raise capital for your business, you get on my business credit list. Does that make sense? Business credit. All right. Period. Now, folks, you may want to go ahead and share this as well, because this is the first time we have actually let people know where and what our services are in detail like this. So number four, if you're interested in fix and flipping, right? Being a fix and flipper, a buy and holder, a real estate investor, listen, I gotta show you. Heads up, okay? It's going to be work. But you see, instead of working 40 hours on a job for peanuts, you're going to be working 40 hours, possibly more, for what some people make in a whole year, right? You can make in a month, or possibly a few hours. And I'm not joking on that. A lot of you already know that. It's called investment, right? Right? Sweat equity at times. But there's different portals, right? There's different doors and different paths of real estate investing, and we want to show that to you, right? There's wholesaling, fix and flipping, buying and holding, private lender. That's my favorite one, right? Listen, I want you to get on my real estate investing list. All right. We have Zoom calls for each and every one of these subjects. All right. Credit restoration, credit card, business credit, and real estate investing, otherwise known as real investing. And so let's go ahead and get into what we can do when our credit restored. If we have a credit card we want to get right now, even though we have maybe, our credit is still getting restored. Business credit, what can happen then? And we want to get into real estate investing, leveraging our finances. We're going to do that right now. All right, so first and foremost, we want to make sure that if it's a line of credit, you want to make sure that you always have this mindset. Lines of credit without installment loans or without installment payments are basically the same. So you treat it as one entity. Does that make sense? So whether it's a line of credit from a bank, whether it's a business line of credit, whether it's a credit card, right, which you are limited with the credit card, or any other line of credit, you want to treat it the exact same. This is the velocity banking flow of lines of credit. This is what I want you to remember, all right? Remember, your income, which will be represented by the I, goes inside of the checking account, okay? Got it? So from the checking account, it'll go inside the other C, which is the line of credit, all right? So credit, we have income, checking, credit. Let me go ahead and draw some arrows on there so you know what the flow of succession is. And then from the credit, what are you going to do? That's right, you'll pay the expenses with it. All right? And so just that cycle. If you would, let's go ahead and abbreviate it like this. IC squared E, otherwise known as ICE. Okay? Let's go ahead and just abbreviate it. IC squared E. You can type that in the comments below. IC squared E, because it's going to be income. We get the income. Boom. We put it in our checking account, right? We never direct deposit it inside of the line of credit because a lot of banks are like, what are you talking about? No, we don't do that, right? So we want to get our income, represented by the I, put it inside of our checking account, right? From the checking account, take that money, put it inside of the credit. You've already paid off your credit card, right? You've already paid off the line of credit, so you don't have to worry about any minimum monthly payments. The Minmo monster, right? You don't have to worry about that. Already satisfied. And then from the credit, right? The line of credit, we have our expenses being paid from our line of credit. All right, now I can just see somebody saying, CJ, I need you to put another C there for credit card or something, right? We're gonna have to make up another name for the CC, right? So it's IC cubed, right? Because we know what the CC is, credit card. That's where, people even know it's not a credit card. So with this knowledge, we're gonna go ahead and make sure that we give you numbers on top of these letters, all right? So let's say you have the 5K and income, right? Where's that 5K going? Straight to the checking account, all right? And then from the checking account, what are you gonna do? You're gonna be, this is so huge because now you're leveraging assets. This is what the wealthy do, and you are wealthy, all right? Look, you say you got $10,000 in credit card debt? Watch this. Do you have $5,000 in credit card debt? Do you have $7,000 in line of credit debt? Is that your balance? Well, guess what? It's no longer like that. Why? Because the 5K is wiping that balance out. It's wiping that balance out. Now, with this, now when we talk about the 5K on the line of credit or the credit card, right? It doesn't have to be all of your income. It can be a portion of your income. Perhaps you only want $4,000 to go there. That's great. Just be reminded that you're going to be paying your expenses from your line of credit and not your checking account, okay? Remember the succession. IC cubed E, all right? And then right here, perhaps you're only going to put, 3,000, maybe you got 3,000 in expenses, so that 3,000 is going out. Now that means, right, 5K minus 3K equals 2K. That's what's paying that line of credit down. Does that make sense? That's what's paying the line of credit down, is the cash flow or the monthly discretionary income. And so that's exciting. Why? Because now you see your money working for you. Now this goes if you have a house, right? If you have a boat or a car, divide them up, right, into monthly payments. You may have done that, and that's good. Just remember that when you are paying things off, when you're paying a loan off, the biggest thing that you could do is take out that principal. And you know what? We're going to go headlong into that in the next video that we put out. God bless y'all, and you have a good one.